Gold price hit an all-time high of $2,204 on Wednesday, March 20th, and since then the price has been falling. So the question now becomes, is the rally over, or is this just a slight correction and gold has a lot more room to go? Let's get into it. SD Bullion is giving away a monster box of 2024 Tree of Life silver coins. Sign up today at sdbullion.com/sweepstakes. Thank you so much for watching. I do sincerely appreciate it. We're looking into gold price, silver price today, seeing what's going on with precious metals. As you can see, gold price is now down to $2,169. It fell over $16 just today. Silver price, not a huge move today, only down 5 cents, but it is currently sitting at $24.82. Silver did hit that recent high of $25.71 on March 20th. So silver's down almost $1 since that point in time. What's going on? Why are precious metals dropping right now? Well, let's first start with the reason that gold and silver went up. So on March 20th, that was the last Fed meeting. And in that meeting, Jerome Powell spoke. And the main thing that he said was Fed leaves rates unchanged, maintains 3 cuts this year. So he basically said, we're not cutting rates yet, but we still plan on doing 3 rate cuts later this year. That was very bullish for metals because they're so excited about these rate cuts. But at the same time, there was something else going on which caused the dollar to surge. If we take a look at the US dollar index, you can clearly see that on the 20th, the dollar was at a low. This is basically the 1-week chart here. And shortly after, the dollar started surging to even higher than it was previously. So what was causing the dollar to surge? Because clearly it was not the Fed meeting and what Jerome Powell was saying that was causing the dollar to go down. Swiss central bank decided to cut rates in surprise move, getting ahead of global peers. That's a headline here. And basically what happened was, because the Swiss decided to start cutting rates, this made the dollar appear stronger because the dollar is actually weighted against the Swiss franc. Many of you know that there are 6 other currencies that the dollar is weighted against, and if any of these go down, it will make the dollar appear stronger. So we have the euro, the Japanese yen, Canadian dollar, we also have the British pound, Swedish krona, and Swiss franc. Now, it is true that the Swiss franc is the smallest of all of the currencies that the dollar is weighted against. However, when the Swiss central bank is cutting rates, this is telling the other currencies it is okay to start cutting rates now. And if they follow suit, this will make the dollar appear stronger. Now, obviously, the Fed, the Central Bank of America, is going to be cutting rates soon, which will weaken the dollar, but all of these things are factors in which cause the dollar to go up and down and cause gold and silver to go up and down as a result. Now, I want you to take a look at what happened to gold price when the Swiss Central Bank decided to start cutting rates. So here we are looking at the live price for gold per ounce in CHF. That is the Swiss franc. This is not gold price in dollars, but you can see gold hit an all-time high. Let's pull it up on the chart. Look at that, March 20th, the highest price gold has ever been in Swiss francs when their central bank decided to start cutting rates. Actually, let me zoom into the 1-month chart. You can see it more clearly. So when their central bank starts cutting rates, gold goes to an all-time high in their currency. Will that also happen to the dollar? Here is an article which just came out today. The headline reads, "Gold price gains against the Swiss franc highlight its potential when the Fed starts cutting rates." The Federal Reserve's signal that it still sees the potential for 3 rate cuts this year, even as inflation remains above its 2% target, has helped propel gold prices to new record highs. However, some analysts have said that the gold's true light will shine when the central bank actually embarks on its easing cycle. Some analysts have said that gold's reaction to the Swiss National Bank's move to ease is an indication of what to expect. Thursday, Switzerland's Swiss National Bank surprised markets with a 25 basis point cut, bringing interest rates to 1.5%. The Swiss National Bank is the first major central bank to cut interest rates. That's really important. They're the first ones to do it. And it's also interesting to note that their interest rates are at 1.5%. Ours are obviously much higher, but their inflation has been more under control than ours as well. Check this out. The central bank said it eased its monetary policy as inflation is expected to remain below its 2% target this year. This is not in America. This is over in Switzerland. For some months now, inflation has been back below 2%, and thus in the range the Swiss National Bank equates with price stability. According to the new forecast, inflation is also likely to remain in this range over the next few years, the bank said in its monetary policy statement. So check that out. They were able to get their inflation under control below 2%, and interest rates were only at 1.75%, and now they're cutting. But in America, our inflation is over 3%, and interest rates are 5+%, and we're going to start cutting. This is a completely different story. I want to show you this a little bit later in the article. While it's not exactly an apples to apples comparison, some analysts have said that gold price action against the dollar when the Fed cuts would be similar to what has been seen against the Swiss franc. So it's very likely that when the Fed starts cutting in June or July or whenever they start, that we will see the dollar start crumbling and gold start soaring once again. If we take a look at the target rate probabilities for the next Fed meeting on May 1st, we can see they are predicting over here at CME Group that there's an 87.6% chance that rates will not go down. They will stay the same. However, in June, they're predicting a 24.5% chance of rates remaining the same, and basically a 75% chance that rates will go down. It's just a question of how far they will have gone down at that point in time. Fast forward to July, they're saying only a 12.4% chance that rates will remain the same. So it's very likely that the Fed is going to start cutting rates in June or July, and that they're going to do 3 rate cuts this year, which is extremely bullish for both gold and silver. So do I think the rally is over? Not by a long shot, especially when we see banks like JP Morgan predicting that gold will hit $2,500 this year. I think gold and silver have a lot more room to go up. I think that these recent dips in both silver and gold price should be seen as a buying opportunity, an opportunity to stack more precious metals while the price is relatively low, at least lower than it was a few days ago. So anyway, let me know down below in the comment section, what do you think about all the price action that's happened this week? It's been a very crazy week. Thank you so much for watching, and I will see you all in my next one. Silver Dragons out.